What is that one thing you did with money and you're like, Jackson, I should have done better? Your worst money mistake.
Again.
This is deep.
So, I bought a suit for $1,000.
Hey! Hello there, welcome to another episode of FILIT, Financial Literacy Podcast with me, Brian Jodotieno. You can call me Branji if you want. Today we are talking about investments, and it's an interesting conversation because we get asked a lot, especially when you do articles about where to invest, what time do you want to start investing. But those are very interesting questions. And we have a guest in studio to demystify every myth, every fact, falsehood about investment, and to give you alternatives as to how you can start your journey in investment. Eric Jackson is with me here in studio, and he is one of the three founders of HISA app. I'm very sure you have met that application on Twitter, online, and of course, a couple of articles. That is how big they are. Client base of about 20,000 people doing every kind of asset class that he'll tell us about. Eric, good to see you, man.
Nice to see you, Branji. How are you doing today?
Keeping well. So let's first start by introductions. That's how we do it here at FILIT. Tell us a little bit of what you do. Of course, I've hinted to the listener and the viewer about you, but we definitely want to hear more.
Yeah, thanks. So my name is Eric Jackson. I'm a co-founder at HISA.
Okay.
And basically at HISA, what we do is we have a mobile app that allows Kenyans and East Africans right now to invest in stocks primarily. So using our app, you can be able to buy Safaricom, Kengen, Equity, EABL, all those stocks listed on the Nairobi Securities Exchange.
Okay.
But besides that, we also give you the ability to invest in global stocks. So you understand now people are familiar with companies like Tesla, Apple, Google, Microsoft. You primarily use some of those products every day.
Okay.
So we thought, why not give Kenyans the ability to also invest in those stocks that are listed in the US, but through an app that makes it easy for them to invest. Yeah, so ideally that's what we do.
Amazing. For how long now? How long have you guys been in operation?
Fully 1 year. Yeah, but we actually launched last year in November publicly.
Okay.
But before that, we were just still testing out with a few number of users on the app. Amazing.
Some pretty good ground covered right there. I mean, if you're able to attract up to about 20,000 users currently on the application, that's beautiful. Let's get into the conversation and why we are here. Yeah. To save or to invest. Many people, of course, we want to make a buck or two. We want to grow our money. We want to grow wealth. All of us want to, make something of ourselves. But sometimes it's never easy. 1, 2, we don't all have the same risk appetite.
Yeah.
And that is something that we have to accept as humans. Opportunities are not the same. Basically, the ground is not level. But what should inform the need to save or invest, really?
Yeah, I think just to answer the first question, it should be to save and invest. I don't think it should be either or. I believe that someone should be able to both save and invest.
Okay, but ideally, which one should maybe come first? I don't know.
Yeah, I think the savings comes first, naturally.
Yeah, you save and then
you invest.
Okay,
because
good.
What we usually say is that you shouldn't invest money that you're not willing to lose. Ideally, you should only invest disposable income or that income or that money that you're willing to lose, because all investments carry risk. To be honest.
True. Yeah.
But for savings, how we look at savings is savings gives you sort of like that foundation. And mostly you save towards emergencies, you save towards unforeseen future expenses, so whereby you can have an emergency fund or you can have a sinking fund. So for us, I think it's best that you start with savings, get that right, and then the savings can actually act as a springboard for you to then get into investments.
In that case, what time then is it best to invest?
When is the best time to invest? I think opportunities are there all round.
Yeah.
It depends on a number of things. So first of all, before you invest, you need to understand what do you want to invest in.
Thank you.
Because you can invest in a business, you know, or you can invest in agriculture. You can buy land. You know, you can invest in stocks. You can buy a bond from the government. So there's different things you can invest in. I think that the very starting point is for someone to first of all understand how long do I want to invest for, and then what's my risk appetite. Like, you know, so if you want to invest, let's say for a short term, and you're very low risk, there's obviously instruments that can allow you to do that. For instance, we have the treasury bills which the government puts out. So it's basically 90-day, 180-day, or 365 days, where you basically lend the government money, and then they pay you back with interest. So that's very short term. You understand.
And before you go so far, I loved the description on T-bills. They normally put there that it's low risk. They're not necessarily risk free, and the government is not telling you we are not going to incur risks. Yes, there are times, of course, I don't have it in the history of Kenya where the government ever defaulted in paying T-bills or anything.
No.
But definitely they have to also manage your expectations and tell you this is low risk. Yeah. Anyway, go ahead.
Yeah, exactly. And I think, as you've correctly pointed out, the government of Kenya has never defaulted on debt.
Not for once.
The US government has only defaulted once, and it was actually just an internal issue, not that they were unable to pay the debt.
Okay. Are we allowed to talk about Greece? Anyway, go ahead.
And Ghana maybe now, but
Ghana.
anyway,
oh man, man.
But how to look at it is that from the point of government is that they have recurrent expenditure they need to take care of.
Sure.
And, you know, they have shortfalls here and there.
So
they're sure that the cash is coming in, so they just need to plug that hole. So that's why T-bills are quite popular. So it's a low risk investment for you. It's pretty much short term, and you still get good returns on it. So, and again, that's just one example of how to look at investment. So do I want to really invest for a day, a month, a year, 5 years or 10 years, and then from there, then you can now narrow down to the different asset classes that you'd want to invest in.
You're so resourceful. I asked you about what the best time is, and you also give me the period, which is pretty interesting. In business class back in high school, we were taught the times now to close a business when you have achieved everything you wanted to achieve. But I rarely see that in this side of the world, where somebody just decides, you know what, in Naivas, nimesha, I've already served maybe 1 million clients, and I want to close it down. But it's all in goodwill. I'm just giving an example. So much love to Naivas out there. Let me talk about you. And when I say you, I mean HISA application. The kind of assets that you're providing, asset classes that you're providing in your investment portfolio, or rather in the options that somebody can choose, are considered quote unquote elitist. When you talk about stocks, some of us shut, some of us just don't get it, some of us are not interested. We are never ever going to get it. So, because we understand that you also need to diversify your investments, Kenyans have a high affinity to land, by all means, and I respect those who do. But you know what land does. Real estate takes a bit of time to give returns, and that is the nature of that line of investment. How then do we make it easy for somebody who, with all due respect, is considered semi-illiterate and wants to, get into this field of getting into stocks, bonds? You're saying you'll be offering unit trusts later on in the year, while as you progress and all that. How do we make it easy for them to be able to access some of these things?
I think there's two ways to look at it. Because if we look historically in Kenya, at the peak of the IPOs, so I'm talking between 2007 to around 2012. So you have Safaricom, there you have
Kengen was giving IPOs.
All that hype. We really got about 1.9 million Kenyans to invest in the local stock market.
Wow.
So I think in as much as we want to say stocks are elitist, the reality is that the people that invested in stocks are actually the older generation, our uncles, our dads, actually going to the grandparents.
And they're the same people who love land so much.
Yes, they have a reason why now they love land.
Okay, sorry to cut you short. Go on.
No worries. Mm-hmm. Yeah, because I think at the end of the day, investors want returns.
Yes,
true. It comes down to that.
No question about that. No conversation. Go ahead.
And if I'm able to get those returns in land, or in just real estate apartments, or if I'm able to get that in stocks or bonds or anything, people will actually gravitate towards that.
Okay.
So what you saw during that period was we really had like a very proper bull market at the time. The IPOs, the companies were doing quite well. If you remember correctly, it was after during the Kibaki era, and the economy was doing quite well.
We saw him even go to the NSE quite a number of times.
Yeah. So they had that upward trend, and that really takes out the whole point about stocks being elitist, because you had brokers who their main distribution channels was really offline. They had agents in T farms.
The T farms,
and they were collecting people and people were investing. So I get stuck when I hear that argument, because to me we've seen evidence that that's not the case.
Okay.
But then we also need to educate more.
Sure.
So then we had that whereby we have a number of years where people just took a break from investing on the local stock market.
Okay.
And it hasn't been as vibrant since, but we are seeing a lot of efforts now to sort of revitalize it.
Okay.
And I think they're going to bear fruit.
Okay.
But then now what we need to do more now is basically educate, especially the younger generation, because we've talked about those people who already invested, but now we have this new class of people, this new age group of people who
Gen Z,
who've not seen an IPO on the NSE,
by the way,
who haven't really had that introduction to you can invest in Safaricom, you can buy this share and this is what it does. You understand? So their first interaction with investments is something different. It's
they want to buy.
Crypto now is quite hot.
Decentralized finance.
So I think there's a balance there, whereby if we're able to not promise returns, of course, but if through the stock market, if it's vibrant again, and people can invest in it, I think we'll gradually see that shift. In terms of to real estate and land specifically, I think Kenyans and land, there's always ongoing conversations.
That high affinity.
But I think it's more a culture. I'd look at it like it's a culture thing. There's a sense of pride, a sense of owning, a sense of belonging. When someone says, I finally have my land. I finally have my land, So I think it will take time to do that. But again, real estate deserves some part of your portfolio, even if it's for your own purposes. I think you should invest in real estate, but you should also look to invest in different other asset classes, so that you're not putting all your money in land.
Basket.
Because the problem of land is you can't liquidate fast enough.
So that's my biggest issue with it.
That's the biggest issue. So you need some liquid assets. You need some cash reserves. You need some stocks. You need some bonds,
emergency funds
that you can quickly liquidate within a few hours.
Let's stay with the NSE for a minute, and we are seeing a lot of course, in the quest to revitalize NSE. The markets have their own issues. By all means, you've been seeing Safaricom taking a bit of a bear drawdown. Safaricom has been on a bear drawdown for quite some time now. Especially in January, they didn't have like the best of months. That is basically for market reasons. Totally understandable. But we are seeing more companies now going towards share buybacks. Case in point, Centum. We are seeing more corporate bonds being issued. Do you think that those are now alternatives also of raising capital towards the NSE? Because, again, part of why it was changed from the Nairobi Stock Exchange to Nairobi Securities Exchange is so that they could offer a wide array of asset classes.
Yeah.
Talk to us about that, because all these also are investment opportunities for the person who today is thinking, NSE is only about stocks.
Yeah, true. Yeah, so I think what we've seen over the past 6 or so years is we've had that bear run that we just can't get out of. And even NMG, issued they did a share buyback last year, if I'm not wrong.
Okay.
And we are seeing sentiment and the likes. Ideally, I think from the point of the companies is they totally believe that their stocks are undervalued. So of course they want to sort of retain more value within, and just buy back some of those shares that are trading publicly. But I think also what we've seen on the NSE is we've seen a lot more concerted effort to actually increase activity.
Yeah.
Because without retail activity, if we keep depending on foreign institutional investors to sort of dictate the market, buy and sell.
Yeah.
It's always like right now during high inflation periods. As you understand, all investors retreat. They hold on to their cash. They're not investing in emerging markets as much.
Yeah.
So I think that's pretty much what we've seen over the past year specifically. And I think what the NSE has done then is they're doing stuff like day trading now.
Yeah.
They
saw
allow
that.
day trading. So
although it hasn't picked up so much.
But it's there.
Is it because people are taking time to understand day trading?
Fees.
Commissions.
But I know it's being worked on.
And
but fees.
the broker fees. Okay,
Yeah.
I hear you. By the way, it's very good to understand the type of broker you're taking. One, are they commission based? Two, what is their risk management strategy in case things go south? And that this also goes to forex trading.
Yeah.
But that's aside. Yes, go ahead.
No, it's good. It's always good at least to put that information, to give it out.
Yeah.
Because let's say, for instance, on HISA, we charge a flat rate of 1%.
Okay.
So if you're trading on NSE, if you're trading on US stocks, if
Okay.
you're buying ETFs, we want to make it a 1%
Uniform.
flat rate.
Okay.
And that what that does is at least it allows you to keep most of the gains you make.
True.
So like an issue with day trading, and maybe just to explain again for someone who doesn't understand what day trading is day trading ideally allows you to buy a share of Safaricom today and sell it the same day.
Yeah.
So usually how the Nairobi Securities Exchange is the stocks take 2 days to settle. So if you buy Safaricom today, it actually settles after 2 days, meaning you'll actually own those shares after 2 days. But now with day trading, you can actually buy and sell the same day. So that means if you feel like you're highly convicted that Safaricom is going to make some moves today,
Sure.
You can actually buy and sell before the day ends and make some gains.
And by the way, you can go long and go short.
Yes.
Yeah, and make money both ways. But conversation for another day. Anyway, go ahead.
Yeah. So I think in terms of just efforts by the NSE and the regulators, it's quite a lot that's going into just reactivating the market. We've had a couple of conversations. 2 weeks back, we had a stakeholder engagement with the CMA. And they were trying to understand how do we work with digital platforms to disseminate information,
to reach more people,
but to also then allow more people to participate in the market. Because we are living in an era where people are digital first. They are consuming all their content on digital. So if we do not reach
them there,
the investments there, then they're not going to do it. I think one person who put it best is that it's Robert from Abujani. I'm sure you know him.
We've done an episode actually.
Nice, awesome. Yeah, he said if the betting guys and the crypto guys reach users first, we can't complain because that's what the users are getting,
Bro.
Yeah, so we are not being
bro, that's deep.
Yeah,
that really
we're not being very as
proactive,
as aggressive.
Oh yeah, or as aggressive. It's because the conversation is interesting. Sorry to stop you in your tracks. For someone who is listening or watching, is betting an investment? Is betting an investment? How do you choose to look at it as Eric?
It falls under gambling. sports betting and gambling. Industry-wide, it falls under sports betting and gambling because so
what is it then? Is it an economic activity? Is it an investment? What is it? Go ahead.
I think the only
is it a business?
What differentiates or the differentiating factor is the element of luck or chance.
Yeah, but it has an element of risk.
It has an element of risk. It has an element of returns.
Okay.
So for those two, it can qualify as an investment.
Yeah.
But there is a lot of chance. So it's a chance game.
Yeah.
You know?
Yeah.
If we're looking at investments and specifically the regulated investments, they have risk as well. They have returns as well.
Okay.
But you're not, it's not as if you're saying you're sort of, the mechanics are the same. You're saying I'm investing X in Safaricom and I would want to, let's say, for instance, exit. Just follow up on something that you said earlier in terms of risk mitigation strategies.
Exactly.
I'll take HISA, for example. So for HISA, we have, when you're buying a stock, we give you 2 additional order types. So one is a take profit and the other is a stop loss. So what that does is, you can buy Safaricom, let's say for the case of Apple, you can say I'm buying Apple at 160.
If the price reaches this point,
if it gets to 200,
I
take
profit.
My profit, please sell my share.
Yeah.
If the price drops by $5, please sell it. I don't want to incur any more losses. So those are the things that we are doing from a technology point of view to make it easier for an investor.
Is it automated?
It's all automated.
Okay.
So you place your order, you set up your take profit, you set up your stop loss prices, and that's automated on the platform.
Amazing. Yeah, those who do forex are familiar with those words, margin call level, and all those kind of things. Allow me to take you back. There's a very interesting comment you made about a majority of NSE investors being foreign investors. We saw last year when Russia just attacked Ukraine, the following day, because of the market crashing in Eastern Europe, we saw withdrawal of about 92 billion worth of investment, 92 billion shillings worth of investment. And I spoke to someone about it at the time I was at KTN. I asked them, so what really would occasion such a thing? And he made me understand that the first thing we need to understand is that this part of the world, the global south, is not normally affected much internally because, of course, our investment portfolio is quite a bit low. The foreigners invest this side so that they use this, number one, as an alternative for in case the markets crash the other side, then they're able to fall back on their investment this side. And that's why when the markets crashed in Ukraine, they had to pull out their investments. So it's not necessarily a Kenyan problem. It's more macroeconomical. It's not from internal. That's just a comment I wanted to make because it was quite an observation. 92 billion withdrew in one day, and you know what that means if you look at the share, the NSE share index and all that kind of stuff. Anyway, so where were we? The conversation got interesting.
We've really much gone everywhere, but I think just to bring it back from different asset classes, just besides the NSE. So, as I mentioned on HISA, we allow you to invest in Kenyan stocks, but stocks and ETFs as well. And what we are doing now is looking at how do we bring on board bonds to the platform so that you can now be able to buy your treasury, your bonds, your government bonds, and then now unit trusts as well. So money market funds are also quite popular locally.
Very popular right now.
And I think they can act as a good savings platform for your emergency funds and your sinking funds. So we feel like for us, and that's why I started by saying it's savings and investments. Because then we want to have you to make you have that wholesome view of your portfolio. So that you don't have you're not buying something. You don't have some money sitting elsewhere and some investments in Kenya stocks elsewhere. So you put it all together, then you can manage it better.
By the way, don't worry, we will explain in other episodes what money markets, treasury bills will go into, government bonds. Each per episode so that you understand the A to Z of all those asset classes. So don't worry, stay put, keep following the podcast. We're almost coming to an end, about 7 minutes to go. Eric Jackson from HISA application is here with us. HISA is basically an application that provides you the opportunity to invest in local asset classes and also international. You can buy Tesla, you can buy Amazon, all those listed in the New York Securities Exchange. And by the way, is it only American or across the board? You also touch London Securities Exchange?
No, it's American for now.
It's American for now. Yeah. Okay, that's good to know. So New York, I guess.
Yeah, New York and Nasdaq.
New York and Nasdaq. Yeah. So those are basically those are basically asset classes that you can consider, especially if you're not that person who wants to go out there, write a business plan, get a space in town, start renting, and let's say you're selling a mouse, you're selling electronics and all that kind of things. Yeah. That's the kind of investment we're talking about at this point. But yes,
maybe just
go ahead.
It's a good thing that you've brought that up.
Yeah.
Because the other thing to look at with investments is it passive or is it active? Yeah,
exactly.
So, as you mentioned, so you can decide to set up a business, set up a shop in town, and all of that stuff.
Okay.
So you can look at the capital and the returns and everything, but the thing you are not factoring in is the time and how
time investment.
You're being very involved in the business. So that's why some of the other investments, like say for instance, stocks and bonds, are not as active as a business or as agriculture or farming and stuff like that.
Yeah.
So you can look at, do I want to be really very actively involved in my investing, or do I want to be more passive? And even with stocks, you have day traders who are very active every day looking at stocks, how they're performing, buying and selling. And then you have the very passive guys who are like, you know what, I'll buy Safaricom now, I'll sell it after a year, or I'll sell it if the price gets to this point. So
more like institutional investors.
Exactly.
I think the other thing that's worth mentioning is some of these things work with volumes. Yeah. It's good to mention that, because somebody will tell you, niko na 10k hapa nataka niekele kwa stocks, nitapata pesa ngapi? Ama niko na this much. Yes, it's good to gain that discipline of, I know I can be day trading with as little capital as I have, but then of course you have to grow your account at some point. Yeah. But talk to us about that, the volumes that come with now being profitable in the long run, if you consider going the passive investment way. And by passive I mean now you're going bonds, you're going stocks, you're considering ETFs, the exchange traded instruments and all that kind of stuff. Yeah.
So I think the beauty is, for us, we allow anyone to invest with as little as I'd say 600 bob now due to the dollar rate.
Okay.
So, and for Kenyan stocks, if we start with Kenyan stocks, so we have Kenyan stocks which are trading at less than 2 shillings.
Yeah.
Quite a number of penny stocks.
Yeah.
So meaning, with as little as actually the lowest you can buy on the app is 20 bob. You can actually own 100 shares of let me just confirm the stock.
Wait, so you guys have also done what Google has done, which is breaking down, because I see you guys can split trading. Yeah, fractional trading.
Yeah. So for US stocks, we've done fractional trading.
Amazing.
So you don't have to own a full share of Apple.
Yeah. Because they're quite expensive.
With 500 bob, you can own a share of Apple and Google. So that takes away all that headache of you saving up to that
a
much
certain
to
time,
invest.
and then to afford maybe Google stock. Because I saw they're about 200 and almost 300,000 Kenya shillings, because it's about 2,000 USD. You have the confirmation?
Yeah, so maybe let me just look at one of the penny stocks.
Okay.
So you have someone like Home Africa.
Yeah.
They're actually up today by 9.68%, and the share price is at 0.34 Kenya shillings.
Surely you could buy that.
34 bob.
Yeah.
You have 100 shares of.
You have 100 shares of Home Africa.
And I think the whole point is changing the narrative about I need 10K,
volumes.
I need 100,000, I need 1 million to invest. What we've seen, especially in finance, is behaviors actually really go a long way. So if you cultivate that savings behavior, if you start putting away cash, if you start putting away just even on your mshwari, if you start saving, then eventually that habit grows over time and you become consistent. It's
Amazing.
the same thing with investing. You start buying, your 100 shares of Home Africa at 34 bob, and then you start accumulating.
Okay.
Yeah.
Amazing. We're almost coming to the end of this. 30 minutes are almost clocking. So we've had quite a beautiful conversation about investing and why you should understand what you're investing in. So there's a personal question we normally ask every guest that comes on the show.
Is the part I was not warned about.
I forgot to tell you in the prep session. Anyway, but I'm sure you remember. This is very easy. What is that one thing you did with money and you're like, Jackson, I should have done better? Your worst money mistake.
Again.
This is deep.
So, I bought a suit for $1,000.
Hey,
I know.
how is that a mistake? No. That's not a mistake. $1,000, I would spend $1,000 on
I
a
know it's
suit.
not a mistake, but
Looking back,
I was like, did I just do that again? Would I do it again?
would you do it again, by the way? Would you today? Knowing what you know now, growing up, of course, I know, growing a bit older, would you do that? Would you?
Yes, I would.
Good stuff.
Yeah.
Good stuff. I would. Trust you me, I am one of those people who naisi ujalua manini. It's just me. If you're giving me quality, I don't mind paying.
I know.
I will pay. Trust you me, I will pay top dollar to have the best.
I know the first time you spend that much on a suit, you
You're
sit
like-
you sit yourself down and
Yeah,
you talk.
like, are we serious, really?
Yeah,
Are
what does
we?
this mean? But then looking back, you're like, yeah,
Yeah,
I'll definitely
it
buy
was,
it again.
It was worth it.
I'll do it again.
Where did you buy the suit? Sir Henry's, or it was abroad?
So it's a designer. It's called Red. What's the name? Red Dot, if I'm not wrong.
Okay.
Custom, yeah.
Good stuff. Okay. Sawa. Please go buy $1,000 worth of suits. We highly recommend it. But only if you're a suit person, because trust you me, bro, out here there are people who don't.
Yeah.
And that's where we wind it up. Thank you so much. I hope you have gotten something that is informed your way of investing. If there's 3 things Eric said is, number 1, just understand the kind of investment you want to go into. Get to know it well. Understand. The 3 main things he said. Thank you so much. Eric will be, of course, getting you on board in other episodes. We'll be now breaking down things like T-bills and making people understand how to put money aside on money market funds. We'll be doing each and every episode of those asset classes to be able to equip you with the best of ways to manage your money better and be more prudent. This is FILIT Podcast with me, Brian Jojotieno. You can call me Branji. See you on the next one. Thank you so much for watching and listening.